Welcome to the Western Producer Markets Desk One Beer Markets Update. I'm Phil Franz-Warkentin, and I'm joined here today with Jerry Klassen of Resilient Capital. The USDA released updated supply-demand estimates and some other numbers today, January 12th, and we're here to talk about them. So welcome here, Jerry.
Thanks, Phil.
So let's get it started off on soybeans. I think yields were left unchanged, but production a bit higher. What do the soybean numbers mean for us here?
I think the soybean market, was under some pressure today, but I think the traders are viewing this report as neutral for the market overall. There was no significant changes to the soybean production estimate. Seeded and harvested acreage was both increased by 100,000 acres, but the yield, like you said, was left at 53 bushel an acre. And so production came in at 116 million tons. This was down 3 million tons from last year. So the crop was smaller, which was expected. Now, as far as demand, the USDA increased the crush a bit. It looks like it will be up 3.4 million tons from last year, while exports were taken down. They're down 4.4 million tons from last year. So this was also no surprise. The soybean carryout will likely finish around 9.5 million tons, which is only up about 500,000 tons from last year. So overall, I think this was viewed as neutral.
Okay. And on corn, it seemed corn numbers had a much larger bearish reaction in the futures. At least they upped the yields and stocks and kind of across the board. It looks bearish to look at it. What's your take on the corn numbers and what they mean?
Well, I think, like you say, the initial view of the corn market is somewhat bearish because they did increase production and they increased the stocks. Compared to the December report, they increased production by about 270 million bushels or 7 million tons. Seeded acreage was up by 100,000 acres, but the main change was the harvested area, which was up by 1.3 million acres. So the yield was bumped up by a half bushel an acre as well. So the overall net change was a production figure of 432 million tons. This was up 54 million tons from last year's crop. So it's a big crop. Now, in southern Alberta, U.S. corn was quoted at $290 a ton this past week. Lethbridge barley is trading about $275 a ton. So I don't think this will have too much of an influence on the barley market. I think it'll be viewed as relatively neutral for the coarse grains. Now, excuse me. Now, I think what the world is looking at here is that the U.S. really needs to carry the world on corn until April or May. On the world numbers for corn, Brazilian corn production was estimated at 131 million tons, down 5 million tons from last year. And Argentine corn was 53 million tons. It was actually up 3 million tons. But I think these numbers should be done in pencil because, we're still a fairly long ways from the harvest of Brazil's second main corn crop, which occurs in May and June. So, like I said, the U.S. needs to carry the world on corn exports, for the next 3 to 4 months. The quarterly stocks report for corn was somewhat supportive because the USDA increased the domestic usage. So I think at lower prices, we can say that, domestic demand is running higher than last year. Like I said, exports are running higher than last year as well. So I think it looks like we have a very strong demand situation here for U.S. corn. The quarterly stocks report showed that the U.S. farmer sold over half of the crop from September 1 through December 1. So that's fairly significant. The commercial trader is holding less stocks than the farmer. And so later in spring, the corn market will have to pull stocks from the farmer. So I think right now, when we look at this corn market, we can say that, okay, production is larger than last year, but I think this sell off in the corn is going to recover here over the next couple of weeks because we have a very strong demand situation. And like I said, the market is going to have to pull stocks from the farmer here once we get into spring.
So we've got this initial bearish reaction, but in time it will ease back up as we head into spring and seeding
Yeah,
time. Yeah.
yeah, that's right. Now, I just want to maybe back up a little bit on the soybeans as well. The soybean market, as we were saying, was a little bit neutral for the soybeans, but I think looking forward, it should be a bit supportive for the canola. On the soybean demand, supply and demand balance, they increased the domestic crush pace. And the large part of this is due to larger domestic demand for biofuels. Soybean oil used for biofuel will be up about 3 billion pounds or about 1.5 million tons from last year. So the US is the largest home for canola oil, and this will be a positive influence for Canadian domestic crush margins later in the crop year.
The On the biofuel front, I know there's been a lot of kind of back and forth in U.S. policy. So right now it's looking favorable for either moving canola oil down there or um, filling filling other needs with canola oil if more soy oil is going to biodiesel, I guess, or
I think
how's
that's
it?
the point. We're going to see more, soy oil, even if they kind of change some of the policy on origin of the oil. I think the net result is there's stronger demand for vegetable oils. And I
Yeah.
think that's the overall, should I say, story for this, should I say, for the demand for soybeans here. It's very much a domestic story. On a side note, they also increased soy meal exports. And I think this was largely due to lower production estimates in Argentina. And so, Argentina is the largest exporter of oil and meal. And with their smaller crop, then I think we're going to see larger, the USDA is planning on larger soy meal exports. So we have stronger biofuel demand. It looks like we have stronger soy meal export demand. So this should be a positive influence for the Canadian canola crush margins.
So beyond the U.S., there was also some updated numbers on Brazilian and Argentinian production. What stands out there, and what do those numbers mean?
On the world numbers, Brazilian soybean production was estimated at 178 million tons. This was up 3 million tons from the December forecast and up 6.6 million tons from last year. So the Brazilian soybean harvest is about 30% complete, and there's a big crop coming on the market. I mean, there's no doubt about it. In Argentina, the crop was estimated at 48.5 million tons. This was actually down 2.6 million tons from last year. So Brazil will dominate the soybean market, from February forward to China and other destinations. The story for the US soybean market, I think, really is a domestic story moving forward. As we mentioned, we have larger biofuel demand and we're going to have larger soy meal exports. So I think the overall tone, net result of this was a neutral outlook for the soybean market.
Okay, and it's good to go on to wheat. I think
Yeah,
that
wheat.
covers
Yeah.
ground. The All right, now on to wheat. So today's report also included the USDA's, I think these are the first numbers on planted winter wheat acres in the country. What stands out there on the winter wheat? I think the sense I saw was that people were expecting a larger cut to acres than showed up in the numbers, or what were you seeing there?
Yeah, that's exactly what the trade was anticipating. We were expecting a year-over-year decrease in U.S. hard red winter wheat acres, but it looks like U.S. winter wheat acres came in at 23.5 million. That's unchanged from last year. Now, even though acreage is unchanged from last year, we have to remember that last year we had above normal yields. So I think at this stage of the crop year, traders are just factoring in average type yields for the U.S. hard red winter wheat. Conditions have been relatively dry in Oklahoma and Texas and parts of Kansas as well. So I think at this stage, we're factoring in a 5-year average yield, and that will take the crop down by about 2.5 million tons. And so even though acreage is similar to last year, I think the trade is factoring in a year-over-year decrease in U.S. hard red winter wheat production. And so I think this will be supportive for Canadian mid-protein wheat in the upcoming crop year. I mean, it's a bit far away, but I think right now U.S. or Canadian mid-protein spring wheat competes with the U.S. hard red winter on the world market. And at this stage, it looks like we're going to have a lower production for U.S. hard red winter wheat next year. So that should be supportive for the Canadian spring wheat.
But I guess globally, there's still the world numbers. They're calling for fairly large carryout on wheat stocks. Does that counter that in any way, or how does it play out with Australia and Argentina harvesting large wheat crops as we speak, I think?
Yeah, the Argentinian and Australian wheat harvests are basically wrapped up now, Phil. And you're right. When we look at the major exporters, there's about 40 million more tons than last year to export. So right now we're at that stage of the crop year where we're kind of balancing new crop conditions and the burdensome old crop supply. As we stated that we're looking for a decrease in U.S. hard red winter wheat production, but we're also looking for a decrease in Russian winter wheat production as well. The Southern District and the South Caucasus region, those have lower precipitation over the last couple months. And so it looks like we're going to see a year-over-year decline in Russian wheat production too by about 6 to 8 million tons. So we have lower production coming in expected in the U.S. hard red winter, lower Russian production. We can make the case that we are going to see a smaller supply in Europe as well after last year's larger crop. So, we're at a stage here where we have a burdensome old crop situation, but the focus is slowly changing to new crop production estimates. And that's going to have an influence on the market where it's almost like we're being when the market will likely incorporate a bit of a risk premium here when the northern hemisphere winter wheat crop comes out of dormancy. So that should provide the Canadian farmer with a better selling opportunity for mid-protein and high-protein spring wheat.
So that would be in the spring sometime. We'd expect to see that.
Yeah, I think last year, we had a rally in late January, February, but this year it'll probably occur, in March. Like I said, just before as that winter wheat crop comes out of dormancy, we're really going to be focused on conditions in the U.S. and in Russia and in parts of Europe as well. So right now, this wheat market has just been beat up so heavily heavily as we finished up the Australian and Argentine wheat harvests. But I think as you go forward, the selling pressure is going to start to ease, and I think that just because we are at such, we're at a modern day historical low for winter wheat prices and mid protein spring wheat. I think we're going to see some upside here in the spring, and then kind of determining how conditions fare in in that spring period and how that crop develops in April and May. That's going to really determine the wheat market for the next year.
Okay. All right. Well, thanks a lot, Jerry. Anything else to add today?
I think for the most part, I think I want to encourage farmers not to get overly concerned about large moves on one day when these reports happen. We see a lot of the managed money coming in on the soybeans and also on the corn, to a certain extent, maybe the wheat. But I think we've seen some larger volume trade here today. Usually that's a sign that they're probably there's a high probability that we might see a little bit of follow through tomorrow. But I think overall, like I said, I think we're still in a situation here where the demand moving forward looks pretty positive for the wheat and the corn, and to a certain extent the barley. I think on the canola, it looks like Prime Minister Carney's going to be in Japan here this week. So traders are watching for some results in regards to the tariffs there. And so we still have a lot of some of these non-trade issues as well that are influencing, these Canadian markets.
Yeah, that is a great point. Thanks, Jerry. Yeah, and thanks again for joining us on the One Beer Markets Update with Jerry Klassen, and I'm Phil Franz-Warkentin.